This is the market rundown for the week of January 9th. As we mentioned in the last video, the market movers of last week was going to be the payroll info and the wages info that came out on Friday, and certainly moved the markets. When you look at the numbers, the non-farm payrolls was 23,000 above what was expected. This didn't quite move the markets as what the wages did. And the wages was the large item on Friday. And when we take a look at it, we see that the wages actually came in lower than what was expected. And this is what really essentially moved the markets. I think if the number came out what was expecting at 5, I think you would have seen the markets move downward. But because the wages were lower than expected, and of course, we have lower wages, it's less money floating around in the economy, which brings down inflation. And that really was the big driver on Friday. And when we look at what happened on Friday, you can see we had a nice little move up. It was really mainly due to the wages. The participation rate was a tick higher, but still historically low. So that was really the big market mover last week. You can see really all through last week, market really didn't do anything until those numbers came out and you saw it move higher. What will move markets this week is the CPI report that comes out on Thursday. You can see what the market is expecting. When you look year over year, it's actually expecting to be lower than the previous, coming in at 5.7. The Cleveland Fed is again thinking it's going to come in hotter than this number, but the Cleveland Fed has been wrong the past 2 times. So we'll see. I don't have a prediction one way or the other as far as how it's going to come in. And last time I really predicted that back in November, I ended up being wrong. My gut tells me, it could be come in a little hotter than what the consensus says. But we'll see. The market is expecting the inflation rate to just slowly coming in lower. And by the end of the year, have a 2% inflation rate year over year. And if anything goes off kilter, you will see the market respond to the negative. And I feel extremely confident that something will go off kilter at some point this year, where a CPI report will come in much hotter than expected, and you'll see the market drop. And the reason I said that is because that's how inflation works. You don't really ever see inflation just slowly declining steadily, at least without some type of large recession, and see the unemployment rate skyrocket. And when we actually take a look at this, CPI on a chart, I went over this in a couple other videos, but you take a look at CPI, you can see it slowly kind of coming down. But when you take a look at all these large drops when inflation was high, let me pull it up and I'll show you. You see what GDP has significantly fallen. So take a look at this chart and you can see inflation's high. Here you see the recession, GDP go below 0. You see inflation falling. Same thing here. And then every time you see it fall and it goes back up, well, you have a spike back in inflation, right? It's not until it significantly goes under and stays under that you actually see this large significant decline and it stabilizes. You can really see this throughout history. And you take a look where we are with GDP, we're not really even close at 0. And to my understanding, we're not even projected to be at 0 coming up on the next report. So, to think that CPI is just going to steadily fall all the way back down to 2 without seeing GDP fall below 0, under 0, I have my doubts. but we'll see. And you can even look at this as far as the unemployment too. If I add that into the chart, when you look at employment, you see unemployment high, right, during the historical times of inflation when it comes down. So here you see unemployment high. Obviously, you have a recession here, and then you see CPI. Here it's pretty high. You can see CPI lower here, high, CPI lower. Well, you look at the unemployment rate, and obviously we're way down here. It just went down. The unemployment rate just went down last week. So, this is not, these numbers to me, the GDP and unemployment rate doesn't show that inflation is going to keep coming down steadily. Maybe it will stall and then come down and go back up. Inflation fluctuates. So unless these two drop, I don't really see where inflation is going to steadily decline like the market thinks it does. Now, the number may come out on Thursday, and it may be much cooler than what the expectations are. You may see the markets rally. I don't know. All I'm saying is, for the market narrative to play out the way it thinks it will, you'll need to see a larger pullback in GDP and higher unemployment. So that's it this week. Thursday's the big day, and that's the day that will really move markets one way or the other. So best of luck.